This is Capital Ideas TV. Coming up, the CEO of LexaGene, a new way to tackle bacterial outbreaks. Mogo Finance Technology CFO on the company's move into blockchain and cryptocurrencies. We'll have the CEO of Hashchain, not just a crypto miner, and the head of Deveron UAS, first mover advantage and key partners in drones for agriculture. Hello and welcome to Capital Ideas TV. I'm Mark Bunting. When it comes to food safety, perfection is the expectation. One costly misstep can be all it takes to destroy a restaurant's reputation and even put it out of business. A case in point is Chipotle Mexican Grill. The fast food chain was roaring to record highs in 2015, only to see it all come crashing down. A slew of the company's restaurants across the U.S. experienced outbreaks of norovirus, salmonella, and E. coli between August and December of that year. That triggered a massive public backlash and a litany of class action lawsuits marked here by the red flags. As a result, Chipotle shares tumbled nearly 50% from their all-time high, wiping out more than $6 billion of shareholder value in the process. The stock has only moved lower since. It's not just Chipotle, though. Bacterial outbreaks are a serious risk for even the most diligent food producers and processors. Part of the problem is that it can take days for test results to come back, and by then it may be too late. Now, LexaGene believes it has an answer to that problem that can help stop outbreaks from spreading. The company is developing an automated pathogen testing device it calls the LX6. It's compact and doesn't require much technical expertise to operate. The user simply inserts up to 6 test samples, punches in some presets on a touchscreen, and hits start. From there, the machine breaks down the DNA and RNA in the samples and screens for up to 22 pathogens simultaneously. The machine runs them through a ringer of 12 positive and 2 negative controls, which maximizes the accuracy of the tests. The entire testing process only takes an hour, and the results can be even sent to a mobile device. Think of it like the crock pot of medical diagnostics. Set it and forget it. Speed and convenience won't be the only benefits of the LX6. It will also be a very low-cost alternative to today's methods. LexaGene is beta testing the product with eyes on commercialization by the end of this year. Now, the company's president, Daryl Rebeck, discusses the roadmap to that major milestone and the market opportunity the LX6 will be tapping into. Daryl, give us an example of the way pathogens are tested now versus what the LX6 can do and the problems that it solves.
So one of the ways that it's changing in the landscape and where we anticipate to change the landscape is, I'll use vet diagnostics as an example. The way it works right now is you take your animal to the hospital, there's a swab, there's urine samples, there's blood, and it's sent away to an external lab. It takes 2 days, 3 days, sometimes 7 days to get results. And in that time, that animal is getting more sick, that animal potentially passes away from misdiagnosis, and it's very tough on the vets in terms of the stress of the owners being more upset. There's lawsuits that are starting to form as a result of misdiagnosis. Where the LX6 comes in, will be the first sample to answer instrument where essentially you collect a raw sample, you input it in the machine, you hit a button, and you get a quantitative answer of what pathogen exists in that sample, if any. And you can test for up to 22 at a time. So if you bring a dog in, you're not sure it's a staph infection or if it's kennel cough, you can look for 22 at a time. You can also look for antibody resistance genes. Your pet has an antibody resistance gene. I know to treat it with something else and give that pet exactly what it needs. And that is a massive difference in that industry, and they are desperate for innovation.
So would you say that the 2 main benefits are speed of use and the ease of the use?
Yes, ease of use. Most instruments, if not all, for competitors require a skilled microbiologist. So in the vet sector, for example, you send it off to an external lab, which is where the time lag happens. You have a molecular biologist processing it there, but you cannot do it on site. You can imagine our device now in any pet hospital where someone just walks into another room, they input the device, they hit a button, and you get that answer.
You mentioned the vet sector. You're also focusing on food safety, and you can focus on other sectors as well. But how big are those markets, and what kind of an impact do you want to have there?
So food safety, vet diagnostics, aquaculture, water quality testing, you can extend that to border control. Border control is a mess right now. There's trucks lined up down the street. It's taking forever to do any testing. So any industry that requires or would benefit from quick, easy to use testing is in play here. Those industries right now are worth about 18 billion, 17.8 billion, which is a huge, huge market to go into. They are all in desperate need of change. Eventually, the human clinical market is a market that we anticipate being into. If you can imagine hospitals, 7 people come in, hour later, you tell them exactly what they have, how to treat it, potential quarantine, etc. These are all massive markets for us and one that require change and one that's not being served properly.
Daryl, take us through to commercialization, which LexaGene is planning in Q4 of 2018, and also tell us about the hiring process of sales reps.
Yeah, so we've just completed the alpha prototype, which is a huge accolade in a biotech company. We've removed all the risks. We've taken it to where the risk reward to me is very attractive right now. You go into beta stage. This is where you adapt the instrument, you test it to make sure it's optimized, you redesign it, you basically get it completely ready for commercialization. At that point, in beta testing, you lend it to clients, say a large vet hospital with multiple locations. That vet hospital is now using this instrument for about 3 weeks, sharing the data with us. We then pull that device from them, leaving them thinking that this is something and knowing that this is something that absolutely changes their day-to-day life. At that stage, you go into pre-sales and commercialization by the end of the year. So again, we'll be in sales in mere months and a unit that is in huge demand.
Now, lastly, Daryl, you come from the financial world at Canaccord Genuity, and you guys and gals are quite upfront about saying, yeah, we want to get taken out, and this could happen earlier than some people think. So essentially, you're saying to investors, pay attention here because we're moving quickly.
Yeah, for sure. I think, being in the business for so long and being in the business for 20-something years, one of the things that's nice to invest in companies is there's an exit that's not 7-8 years, because investors and people in general lose focus and lose interest after some time. This has been years and years in the making. This is basically something that was started in 2002 after 9/11, looking for anthrax. We're now at the point where we really anticipate and feel that by November we could have a takeover offer from one of these larger companies. The larger diagnostics companies are no longer doing R&D. One of the largest ones just scrapped a $160 million program. Much like mining and some other sectors, it grows by consolidation. All of these companies have stated we need to acquire more companies with more technology to compete in these fields with the other competitors and sooner, so that we can compete in every industry. You have an $86 billion diagnostic company just mentioned the other day. We can't compete in vet diagnostics because we can't get our costs down low enough. $85 billion company, LexaGene's a $30 million market cap. As we build this up, the average for these to get taken over is around $400 million. It's a pretty, it would be a beautiful merger in terms of what they need and what we need.
For many companies, we tell them that their data is like the Mona Lisa. It's incredibly valuable. Every large organization in the world right now has a 42% compounded annual growth in their data storage, and the old methods aren't going to work. Leonovus technology was built under the following assumption. All your investment in network technology and security technology and hardware, we assume it all fails, and the bad guys are going to get access to your data. With Leonovus, we're the last line of defense.
Many investors looking for the potential for massive returns have set their eyes squarely on cryptocurrencies. They've soared to dizzying heights, tumbled back towards Earth, and gyrated somewhere in between in just the last few months. Some investors love the thrill, while others find their stomachs churning with anxiety. For that latter group, Mogo Finance may be a sound compromise of risk and reward. The financial technology firm recently teamed up with Bitcoin miner DMG Blockchain Solutions. The deal will see Mogo Finance license 1,000 Bitcoin mining machines to start with, which DMG will operate. They'll begin work later this quarter. Mogo Finance has another blockchain feather in its cap. It recently added Ethereum's co-founder as a special advisor. With the initial pieces in place for its cryptocurrency shift, 2018 is shaping up to be a year of significant change for Mogo. Here's President and CFO Greg Feller on the company's roadmap into Bitcoin mining and beyond. So Greg, Mogo's been saying some of the magic words lately, cryptocurrency, blockchain. You made a big push into these areas. So tell us about how all this came about.
Right. So look, Mogo really is, as Canada's leading Canadian consumer fintech, is really part of this broader digital transformation that's happening in financial services globally. And quite frankly, we see blockchain and cryptocurrencies as just part of that digital transformation. They're actually an accelerator to it. Ultimately, we see blockchain as a increasingly a core part of any technology stack for a next-gen digital banking experience, which effectively is what Mogo's building. So obviously relevancy there for us to really be a leader in that area. And then on the cryptocurrency side, we really see that as sort of a new asset class that consumers, in particular millennials, want exposure to. So again, as we continue to innovate and launch new products that we believe are relevant to this next generation of consumers, cryptocurrencies, being able to buy and sell cryptocurrencies in an easy, secure, trusted way, we believe is an absolutely relevant product for us to launch on our platform.
And you're playing it up because I went to your website recently.
Yeah.
The first thing you see is Bitcoin,
Right.
crypto, and then of course you offer loans and mortgages,
Right.
and you've got ID Protect, which is new. You can get credit cards and so on. So wrap it up in a bow for us in terms
Right.
of all the offerings.
So if you think about what we are really building is that next-gen digital banking experience. We want to be your go-to next-gen digital bank, where all of your products that you need to manage and control your financial health are there in the app in a digital, convenient way. So whether that's buying a home, getting a loan, using your Visa card and needing that instant push notification to understand what your real-time balance is to control your spending, whether it's understanding what your credit score is and how to improve your financial health. We were the first in Canada to offer that for free. And now we're the first to really bring in that Mogo Protect. So if you think in this increasingly digital world, hacks are increasingly prevalent. It's almost impossible to protect ourselves from our ID getting stolen because our ID is sitting on servers that we don't control. But what we can do is protect that ID from fraud once it is stolen, and that's really what Mogo Protect's about. So it's about building out your products to allow you to manage your financial health, but also protect it.
You recently raised $26 million. How are you going to deploy that?
Well, we're obviously scaling up around the crypto and blockchain space. We continue to want to launch new products on our platform. We've really built out this platform. We've now invested over $150 million in the platform itself. So we really have a platform that we can continue to launch new products very quickly. But having the resources to be able to invest on the product side, on the technology side is important. We have about 240 employees today, almost 100 of those in our technology and development and product team. So we have significant scale in this market today. Having that new money, we're going to have just over $40 million of cash on our balance sheet now. We're very well capitalized, for all the things we want to do in 2018.
Now you're growing, as you say, revenue's growing. You're getting more customers, but you're spending as well to grow. So when does that all flow to the bottom line and you become profitable on a net basis?
So look, we are very much in that growth phase. We're no different than companies like a Shopify or a Square that has scaling revenue, but ultimately have chosen to invest more heavily in the growth phase, whether that's product development, marketing, etc. And we believe ultimately that is going to be the long-term driver of shareholder value. So we are EBITDA positive right now. We're not net income positive, but obviously as we continue to scale our revenue, continue to scale gross profit dollars, we're going to have an increasing amount of money that ultimately we can kind of flow to the bottom line. But that'll be a decision that we will continue to make as to where is their best use of resources. Is it invest in some of these new products, or is it to get to a net income positive faster? But that's quite frankly a dial that we believe we can control.
Most of the data that's ever been created has been created in the past 2 years. You need a system for analyzing and making sense out of that data, and that's what we do. Where we, I think, really shine is we're a turnkey solution. We have hardware products that we can put in place. We have telemetry that we can put in place. It's all cloud-based, and we do it all for you.
In the wild west of cryptocurrencies, it seems like a new coin is hitting the market almost every day. So you can be forgiven if your head is spinning a bit just trying to keep up with them all. But there's one in particular you should be paying attention to. It's called Dash, and it's quickly rocketed its way to the top of the crypto heap. Now here's a look at the price of Dash relative to Bitcoin. To say the past 12 months have been good to the upstart currency would be an understatement. In January of 2017, Dash was worth less than $15 US a piece. In January of 18, it was worth more than $800. And tracked against Bitcoin, Dash has roughly quintupled in value. Dash now has the 12th highest market capitalization among cryptocurrencies. That's according to data from CoinMarketCap. So what makes it so special? Well, it holds a few key advantages over other cryptocurrencies, namely Bitcoin. Dash transactions can be processed in just over a second, whereas Bitcoin transactions take more than 10 minutes. That translates into much faster block creation times on the Dash network as well. Transactions using Dash also cost just 1/5 of what they do for Bitcoin, making them an ideal choice for consumers. Dash users can also send transactions privately. That's not the case with Bitcoin. Hashchain Technology is one of those early adopters that's upbeat about the future of Dash. The company purchased a Dash masternode and intends to make the cryptocurrency a key part of its mining operation. Hashchain runs a cryptocurrency mining facility in Vancouver and is aggressively building scale elsewhere in North America. By 2020, it wants to own nearly 50,000 mining rigs and branch out as a blockchain solutions provider. Hashchain's CEO Patrick Ray recently joined me to explain his master plan. Patrick, you, unlike other CEOs of crypto mining companies and blockchain companies, are really hands-on. How did you start this business?
Yeah, so I'm a tech entrepreneur from New York, a computer science major that started building rigs in his garage, and probably one of the only CEOs in the space that have done this himself. So it's exciting. I love the space. I love where it's going. There's a lot of smart people out there doing really innovative things, and I love working with them, partnering with them. I think there's enough room for growth that there's not competition. We can complement each other, partner with each other. A lot of the other companies that are doing great things, and I'm excited about working with them.
So you call yourself a blockchain technology company, not necessarily a cryptocurrency miner. So how do you differentiate from, say, the Hive blockchains of the world?
Yeah, so we're as you said, we're a blockchain technology solution company. We have a division in cryptocurrency mining. It makes sense right now. It's very profitable. It's easy to scale. It's where I started, but since day one, my vision has been a three-step approach. The first one, scale mining operations. Second one, acquire some blockchain technology companies in the space. Because I've been in the space for a while, I've known some of the best blockchain developers around the world. So I was going to conferences in New York City when 30 people would show up. Now 10,000 are showing up. So I've made some really good relationships in this space, met some great people, and we're looking at strategic acquisitions and helping them scale their companies. And then my third stage is building software solutions in-house, and that's what I've done my whole career. And so we own our own IP, building our own, and that's what really excites me. So we just acquired a company called Node 40. They're a cryptocurrency accounting and master node hosting company. Now that we've acquired them, we're the biggest master node hosting company in the world. And
okay, just stop there. Explain what a master node is, because I know you just bought one recently and you just struck that deal, as you said, for $8 million US. So what's a master node for those who don't know?
Yeah, so one reason we really like Dash, and I've always been a huge supporter of Dash, is they have the private send functionality, they have instant send functionality, and they have a master node functionality, which you hold 1,000 coins and you really participate in the ecosystem of the coin. You vote on budget proposals, and you allow upgraded functionality throughout the coin. And I think that a lot of coins in the future are going to be taking similar approaches. It's kind of like a proof of service model. And so the way Bitcoin works, and miners mine Bitcoin, is 100% of the rewards go to the miners that are using proof of work. With Dash, 45% go to the miners, 45% go to the Dash master node holders, and 10% goes to the treasury. And it's a really unique model that I think differentiates the coin. The technology behind the coin's amazing, the team behind the coin's amazing, so we're a huge supporter of Dash. I believe in the coin personally. I think it's going to be here for a long haul.
And the amount of megawatts is directly related to revenue and eventually profitability, am I right?
Yeah, so right now, we're seeing about 4.5 million revenue per megawatt, and based on that, by end of year, we should be, over 80 million revenue directly from our mining division. But I'm really excited to see 2018, 2019 on where a cryptocurrency accounting company can go. They're already making money, and I think that there's even a bigger play, as everyone in the world is going to need help when it comes to crypto accounting.
So we have a tagline, and that's like the Desert Line Energy is the next producing lithium mine in the world. Not only at Desert Line Energy, we're ready to meet the demand of the lithium market today by coming into production now. We're also looking out into the future, and we see a bright an opportunity for us to be a long-term producer producing lithium chemicals for the growing lithium market today and then into the future.
When we think about the potential applications for commercial drones, inevitably the transportation sector springs to mind. Consumers often imagine little aircraft buzzing through cities delivering packages and supplies. But that's not where drones will have the biggest impact. Instead, look to farmers' fields for one of the top opportunities. PwC predicts agriculture will be the second largest market for drone-powered solutions at roughly $32 billion. Analysts there posit that the world's population will jump by more than 60% from current levels by 2050. That increased demand for food will come as climate change wreaks havoc on growing conditions. As a result, farmers will need to find ways to maximize their crop yields, and drones are part of that solution. Deveron UAS is looking to grab a slice of that $32 billion pie. The company is building a network of drones across North America that can survey farmers' plots on demand and in mere minutes. The drones capture high-resolution images and sensor data, which can tell farmers about their crop conditions and soil quality. That knowledge can help them choose the best moments to plant and harvest while sharply lowering their labor costs. Deveron already has a major leg up on its would-be competition. Its drone network extends from Alberta to New Brunswick in Canada and throughout the Farm Belt states in the U.S. The company has also signed an agreement with a division of Monsanto to provide farmers with imagery and data analytics. Deveron's CEO, David McMillan, explains why this first-mover advantage spells big things for his company and what's next in the development plan. So David, Deveron UAS recently struck a deal with a Monsanto subsidiary. Your stock shot up about 30% that day. So clearly there's interest in what you're doing here. So what's the significance of this deal?
So it's one of these things, I think, for us that it gives us access to an unprecedented number of customers. When we first started the company, I had a cold call list of 15,000 farmers in Ontario and just started dialing. As you can imagine, that's no way to scale. Now with this integration that we have with ClimateCorp, Monsanto's large data platform company, they have 120 million acres of farmers, or 100,000 individual farmers that pay to access this data platform. And now Deveron is being offered as a featured product. And I think the significance of it as well is that they're very picky on who they work for or work with. It's not just every company in the world can build an app and then get on the platform. It took me 2.5 years to build a relationship with management. And I think for us, it's really exciting in that, to get access to a farmer you've never met in Illinois. I mean, imagine how long that would take. Now we have direct access with ClimateCorp's user ID. Those guys can log in directly, they can order a flight from Deveron, and our pilot can be out there and collecting that information in the morning. That afternoon, all the data ends up in Climate's platform, and the farmer can start providing analysis. And I think that's another really big thing of why it's important for us. So, the market reacted because it's a huge growth opportunity. But for us, it validates that now farmers don't have to worry about where the data goes. And anything that's easy for a farmer has a really good chance of being successful. And at the end of the day, for us, it's a revenue share partnership, which is really exciting in a sense of Monsanto and ClimateCorp are very aligned with us to be successful. It's not just, okay, folks, you guys can buy it if you like it. It's if we're both successful, we're both going to make money. And if we're both making money, it means the grower is also making money because he's involved in this data-driven decision making.
So take that further with the farmer looking at that data. You say that you can increase their yields, lower their costs. So what's the direct and immediate benefit when they're looking at that data?
Yeah, so a really good example would be on, not to get too technical, but redistribution of nitrogen. So the current process in farming is to put the same amount of nitrogen or fertilizer down across an entire farm, and maybe it's 100 acres. The average farmer in North America spends about $200 an acre on these inputs. So to put the same amount down is really inefficient because you have healthy plants and you have not so healthy plants. So our data helps them identify where we should apply maybe more nitrogen and where we should apply less. And on an average sense, what we're starting to see in North America is that farms have like 40% over application of inputs. So that's a direct opportunity of $80 an acre in cost savings using this data.
PwC says that this drone data for agriculture sector is worth more than $30 billion. So clearly you want a big chunk of that. What are your goals ultimately, and how do you get there?
Yeah, so that's a great one. And also Goldman Sachs put out a report in 2016 that says precision agriculture, or this data agriculture business, is worth $242 billion. So it's really about the data is changing the way that farming happens, and we're focused on this like drone data application of it. And I think for us, the way we think about it is there's 400 million acres in North America. Our go-to business right now is charging anywhere from $3 to $5 an acre for this data collection. So if you start doing the math on even 10% penetration is 4 million acre market size. And typically we fly our fields 2 to 3 times a year. So there's an opportunity there of $15 an acre. Over 4 million acres at 10% penetration is $60 million a year in top line revenue. So that's just the start of how we're trying to capture it. We think that the PwC study assumes a lot of value in buying drones and software and analytics. And I think what we've found from day one is that the problem is farmers aren't buying the drones themselves. The farmers want to buy the data. So I think we're a really big plug into scaling that market opportunity. So I think as we've demonstrated since we first started the company and started working here in Ontario to now being across Canada and into the US, we're starting to grow, we're seeing returns, we're seeing validation in the data. I mean, it might take 3 to 6 years to get the entire farming market to sort of believe that what we're doing is valuable for them. But I think once you get there, it's such a huge market opportunity that it's worth growing the business to take advantage of.
You touched on revenue. Let's use Drone Delivery Canada as a comparison. We've had Tony in here, the CEO, a few times. That stock has really taken off. The markets are really recognizing the potential there. It's getting some analyst coverage. So you've done okay, but you want to do better. So what's the difference, do you think?
I think agriculture in general has sort of been a misunderstood market, and I think Drone Delivery Canada has done an unbelievable. Drone Delivery Canada has done an amazing job at getting the word out there. We've sort of been sleepy in the background, building the business one brick at a time. And I think now that in November we announced our partnership with Monsanto, the world is starting to understand who Deveron is. And I mean, Drone Delivery had an analyst report from Macquarie come out just the other day with a price target of $3 and a $600 million market cap, which is so exciting and validation that the logistics model is true and real. And I think that we just see ourselves as this drone company that hasn't been identified by every investor yet, but that there's the same growth pattern potential for us as we start to get out and monetize and grow the business. So it's awesome. I mean, the drone space, there's not many ways to play it on the public market side. It's all been private money out of Silicon Valley. So I think in the short term, there's a really great opportunity for re-rating for Deveron as we move forward and quarter by quarter start to see the growth with Monsanto and its customers using the data. I think the long term is very bright for Deveron.
From the heart of the financial district in downtown Toronto, that's our show for this week. I'm Mark Bunting. Be sure to subscribe to our YouTube channel so you don't miss an episode. And for more great research and great investment ideas through our weekly digest and morning note, subscribe to capitalideasresearch.com. Thanks a lot for watching, and thanks for investing like a pro. We'll see you next time.